Hey everyone. Well, we've seen the market come from straight up off the bottom and without much of a breather at all. And yeah, it was certainly getting ahead of itself with respect to some moving averages, the 10-day, the 50-day, etc. So this sort of pullback here is not surprising. The question will be how much of a pullback it'll be. The Bank of England came out shortly before the open to announce that they are taking the position of keeping rates at the current levels. They feel that the global economy is weak. Their own economic situation at home is also weak. So they're taking a very dovish stance of keeping rates at current levels, which is surprising to a lot of people because it's been more perceived that the Bank of England is more on the hawkish side of things. But the report that came out today is very dovish, and so they're just singing the same song as the rest of these central banks about keeping money easy as possible. So the party train, it continues to chug along at a pretty good clip here. We mentioned in the reports that a lot of these actionable stocks aren't really going anywhere despite the general markets trending higher. And it seems like the institutions are taking a risk-off approach to the market. They don't trust perhaps this straight up from bottom action on part of indices. So they would rather put their money into safer bets. So that would be the larger cap names. Some of the super caps we've seen have continued to do well, like Amazon, Apple. We put Facebook on the list today. It looked like a viable gap up on Earth, strong earnings. Its fundamentals are looking pretty good across the board. So again, it's been a market of taking profits whether you have them, but in this case, in the last several days, there haven't been really too much in the way of profits. I mean, there's been a couple exceptions, like type in IPHI. We put that on as a pocket pivot on the 15th of October, and then it had a viable gap up on strong earnings on the 28th. So you had some profits in this thing. Since then it hasn't done much of anything. It hasn't done anything impressive, given that the market averages have gone higher. So and a lot of these are like that. They're telling the same story. So you got to be pretty careful in terms of how you handle your stops. ELLI is a stock that had a pocket pivot on the 27th, and so that we put it on the list. Let's see, where's the 27th here? There we go. So the 27th, and you can see that it did seem to get ahead of itself. You took some profits into that nice little run. Nothing wrong with that. That's a nice what is that? Several percent gain, almost 10% gain in 2 days. But if you didn't, and you certainly should have been selling as it came back through major moving averages here, in which case you probably would have broken even or only suffered a very small loss on this trade. Because you can see it just knifed through, and then now it continues to go lower. Maybe it'll get support at the 200-day, but that's neither here nor there in terms of going long stocks. We've got a question today. I'll just get to that right now. It was about it's a pre-webinar question about. They start out by saying that due to the impressive technical action prior to October 21st. Now, if you look at the chart here, let's take the NASDAQ composite. You take either one really, and you look at October 21st. You'll see that is not necessarily the point at which you say everything's clear, it's all blue skies ahead. It's just simply because it's done this before. You had these big corrections. It did this in 2010 and 2011, where you had this steep correction, and then you seem to recover, and then the market retests lows, fooling the crowd. And so that was the problem with mid-October, this period in here, that it could have done the same thing. It didn't. Fortunately, it showed strength. So now, the rally did become viable. And it's more of a big cap rally, really, that we're seeing. Again, institutions feel safer in the comfort of big cap names. And the thing about being a portfolio manager for a big institution is that you need to keep up with your bogey, you need to keep up with the competition, otherwise you won't make it. So, these guys don't want to risk their neck on smaller cap names in this kind of environment, so they want to be focused on the safest names.
Hey, Dr. K, somebody's asking about, they can't see our screen, but I'm not getting that from anybody else. I think you're the only person, Jared, who's asking about that. Dr. K, you can see the screen just fine, right? How about everybody else?
See everything's just fine.
Yeah, everybody else sees the screen. So it's something wrong with your cheap internet. So maybe, I don't know, but I don't think it's not coming from our end. So you're gonna have to figure it out there. Anyways, continue. Okay.
The member asks about X-ray, and here, let's pull that up. X-ray. So he says, despite does the impressive technical action in the market environment, current market environment, outweigh the stagnant fundamentals of X-ray, and therefore make it worth going long should it constructively pull back? And my answer is that here's a stock where everyone sees what's going on. There's a lot of risk in first of all taking on board a stock that has fundamentals that are somewhat mediocre. I would just stick to the best stuff, best technicals, best fundamentals in any kind of market environment, not just this one. But for instructional purposes, yeah, even if this one were to pull back constructively, everyone sees what it's doing. It's way ahead of itself. And so I wouldn't be interested in this kind of name. If the fundamentals were top notch, then it would have already gone on our list most likely. But as you say, you can't kiss all the babies. It would have been nice, of course, to say, oh, we added it down here. But you can't kiss all the babies, and this thing is it's just not actionable, and I don't expect it to become actionable until its fundamentals improve. And with that, I will hand it over to Gil.
Yeah, I would make the point, though, Dr. K, that I think this is a medical stock, and to make a blanket statement that you can't buy a stock because the fundamentals don't fit so-called CAN-SLIM rules is not entirely accurate, because a lot of biotechs will have huge moves even while they don't have any earnings. And if you think back to what I think it was 2012 when we were first buying Tesla, it had no earnings, and I remember buying Solar City, and it had no earnings. So there are a lot of exceptions. I find myself in this market, you're better off paying attention to the fundamentals. The technicals first, because that can often lead you to a forward-looking situation. I mean, a lot of people will complain about Amazon, having a ridiculous valuation, but the bottom line is in 2019 they're going to make $24.75. That's $24.75 a share, and that's what the market's looking at. So I would say the old CAN-SLIM rules about earnings have to be up this amount and return it has to be this and that. I think it's all out the window, personally.
I would say that he wasn't asking about the CAN-SLIM, because CAN-SLIM is so old and it hasn't worked in years. I'd say it hasn't worked really in over a decade, really. Last time was 2003, sadly. But times change, markets change. I think he was more asking from the point of view of here's a stock with fundamentals that are just not looking up to snuff, but it has had good technical action. And that is absolutely true. But I want as many ducks in a row as possible. And that said, I mean, if you do, we just put out a report, or at least I put something out, I remember about biotechs not having earnings. Someone had a question about that, and is that a problem? And I told them, no, it's not at all a problem, because biotechs often don't have earnings, yet their story is compelling, and their technicals are looking great. So, it depends on the industry group how forgiving you can be with regard to a company not having earnings. And there are other metrics, of course. If they don't have earnings, you can look at sales, you can look at their research pipeline and what's coming through, various metrics that we use to substitute for a stock that does not have any earnings on its books.
Yeah, and on top of this thing is extended, so I think unless you're buying it somewhere down in here, as it's turning up the right side in the 50-day, I think there's pocket pivots in there. That would have been your best entry point, rather than looking at it now as, I guess he's looking at it as a breakout, which I guess the breakout would have been back here. But see, if you knew something about this and you understood how to buy roundabout pocket pivots, because here's one right here, okay, bingo. You're even getting one coming up to the 10-day line here, which is back on October 5th. And so that's where you could have been buying it. You know, once you see this, I think you're like the slow animal in the herd, you know, frankly. And I think people who are looking at base breakouts generally are the slow animals in the herd. I think a lot of these things turn a lot sooner than the breakout. And where you really get these nice moves of 20, 25, 30% is in names that are not breaking out. Because I haven't seen many breakouts go 20, 25% from the breakout point. So the idea of taking profits also when a stock gets to that level seems a little odd, since you don't see that much in this environment. But I do think if you're buying a roundabout pocket pivot on this and you knew something, this could have been played. You know, if you know where your stop is, it does do a little flipping around the 50-day here, and then it goes higher. But you know, if you did, you could be you'd be up 10% on that, and maybe en route to a 25% gain in the stock. But you know, I think it's kind of become absurd to tell people to take 20, 25% profits when you have them after you buy a breakout, because you really don't see that. Now, I don't know if that changes, but let's see. From an individual stock basis, I tend to look at things, you know, basically in a bifurcated basis. I'll look at things short or long. Sometimes I can be long and short the same stock at different points in its pattern, and mostly over the last few days I've been getting more long, which has been really the place to be, and I have been able to make progress that way. So I just kind of go with what's working for me and then lean in that direction, let the market naturally pull me into one side or the other naturally. So I think today what you're getting, it looks like a pullback today, RTK, on about average volume right now, or about even with yesterday. And so it just might be a pullback ahead of tomorrow's jobs number. And I think that the ADP report came out yesterday, and that was a little bit better than expected. And you saw the market rallying, I think, on that basis. It actually was all over the place. But I think that it may just be a pause before tomorrow's jobs number. But we'll see. You know, I'm kind of watching this closely today. I'm noticing Facebook is coming in, so it's now dropped below the prior intraday low. So that's putting it in a bad position, I think, in terms of a viable gap up. Now, does this thing become a short here, and does it reverse? Maybe it does, you know. So let's see. I have no aversion to flipping back to the short side on anything. So let's see. I actually did buy it earlier, and then I sold into the move when it started to look like it started to run out of gas. If you look at it on a 620. Here, it seems this is getting a little extended. You're getting a MACD extension here. So I kind of bought some this morning. I wasn't too sure. The other thing I was thinking, it could come in. It could turn out to be a big short. And that certainly wouldn't surprise me in this market, because a lot of stocks will be looking like they want to take off, and then they just kind of reverse and get ugly in a big hurry. So I think we'll see what happens. But market's coming down more, down 75. On the Dow, Nasdaq's off 40, almost a full percent. And you're seeing some of the big cap stocks. Like I would watch Apple here. It's breaking the 200-day line. I think volume is running above average for this time of day. Let's take a look. Give me 1 second here.
Yeah, it is. It's about 40% higher than normal.
Yeah, so, you know, it's looking a little bit suspect here. But I think a lot of things are, Amazon's been jamming. I had a bunch of that. I sold into today's move. It's getting a bit extended. It's been tracking along. I don't know if you can see it, but I put a 5-day moving average in there. just for fun. So, watching some of these pullbacks, trying to decide, do I want to buy something or do I want to take any more profits or what? I don't know. I'm thinking of just sitting here for now. What brand name charts are we looking at? Well, these are e-signal. So this is HGS Investor. So the market's coming off down 68 now, 67. It's kind of holding up. So I just have this. Let's see. I just puked a position that I've been playing. Actually, this is really nice. Silica Holdings. I had it, bought it on Monday morning, and you got a 15% plus move in 2 days. Sell into that. Now it's coming in. I've been trying to buy it on this pullback, but it's not really holding in there. So I just decided to toss it and move along. So I noticed they are hammering names like FireEye today after earnings on a big gap down. So that's taken down Palo Alto Networks, which is trying to hold the 200-day line. So another one I've been looking at, and I've been playing with this one as well, is Vasco Data, which, if you look, is at the bottom of a rounded out sort of formation. So I'd call this a roundabout pocket pivot here. And now it's moved up, it's pulling in, and it's down in sympathy to FireEye. And so now they're bringing it in along with everything else. The volume doesn't strike me as being all that heavy. Let's check it on an intraday basis. So, crap, come on. Get rid of these filters. I wish there was, I'm going to tell these guys they need an automatic button. Is there a button to hit for getting rid of your filter? So you have no filter on that. Let's see. Coming in on 44%. So there's some selling in it this morning. So, but to me, it looks like what they're doing here is just taking everything out and taking profits into this move here. So we'll see how this holds. But I would also be open to the possibility of, you know, of a market top anywhere in here. So that really would not surprise me if that were to occur. So I'm actually looking at possibly shorting Facebook here. Let's take a look at this. I'm going to tap out a little bit here. I'm only long 3 stocks right now, so it's kind of hanging out. Let's see. Someone's asking XON. I'll answer some questions here. XON, stalking XON. Well, you know, I don't know what you're stalking. They're coming out with earnings, so I'd wait until earnings come out. But it's trying to turn, but you're kind of getting a reversal. Did the earnings come out today? I'm wondering.
I don't think so. The volume is,
I think it's tomorrow or in the next few days. Let me check this again. Here, let's look at this on, it's coming out 11/9, so that's going to be next week. So I don't, you know, I don't know. I would not be playing this one necessarily. I like some of the other ones that have been acting okay. Like I played Biogen. It looked viable along this tight area here, and boom, you get a nice move from like 275 to 300, and you take it, and the thing rolls over. So, you know, I don't know. I wouldn't be surprised if Facebook topped here. Just watching the way it's trading this morning, I put out a short at 108.38 right now on the bump, and it's starting to come in. It's bumped. You know, I don't know. I think this thing might roll over. If it did, that would probably be a bad sign for the market. So I'd keep an eye on that. LinkedIn is the other one, the other big stock that's been acting pretty well. Bought some in here. I still have a little bit of it, but you can see it's pulling into the 5-day line. It's got a fair amount of momentum. We'll see how it holds. It might be the go-to name relative to say Facebook. So, anyways, I'm trying to keep track of everything here. Let's see. But you know, those are decently tradable moves, and as Livermore would say, you know, you get some points out of those. And in this market, that's what I'll take. and that usually seems to work out pretty well. And without getting all hung up on trying to play a big trend. If you're going to try and play a big trend, I suppose, and be a trend follower, then I guess you would have bought the Bible gap up in Amazon and you're sitting there. You would have bought the Bible gap up, of course, in LinkedIn and you're sitting there. You would have bought the pocket pivot here with Apple and you're sitting there. And maybe these things all hold up okay. Maybe we see a rotation also away from the big caps and towards something smaller. I don't really see that there's a risk-on, risk-off component really in the market. You could argue that there's a little more risk-on if the Russell is rallying. You see it broke out of this range. See how it tried to break out here 7 days ago on the chart here, and then it pulls into the 10-day as volume lightens up, and then boom, we come out again. But the one thing I notice is that the volume on this is lighter on this breakout, and so there's not as much thrust. So it's hard to make a determination as to whether this is really showing conviction coming into smaller cap names. You are seeing some more small cap names act okay. For instance, Paycom on this gap up, and it's holding the lows here so far. But it tends to be a volatile little stock, and I think that you got to expect something of a wild ride in here. Let's see, checking around.
Yeah, it doesn't really go anywhere. That's part of the problem.
Yeah, most of them don't.
Of that. And this is the nature of the environment. And the Russell is so severely lagging the markets, and that is a risk-on index, and that it's in last place basically compared to all the others.
Yeah. So you're seeing some percolation in smaller names, but nothing really substantial. Meanwhile, what's really been working have been the big caps. And you have to ask yourself, why is money moving into big cap names? Is this sort of like the final push me into established companies that I know are going to be there for the long term, and then hunker down and get ready for a nasty bear market? I don't know. And so you have to think about what it means. What does it mean with all these names, these big cap names moving and leading the market? Because we have seen the NDX, for example, making a 50. Let's get that symbol right there. Whoops, I forgot the dollar sign. Yeah, I'll get this down eventually. Just give me a few days. The NDX made a new 15-year high. So would that qualify as an all-time high, Dr. K, or is it just a 15-year high? So
it's not an all-time high yet. It's pretty close. The all-time high is 48.16, so it's just what is that? About 5% away.
Yeah.
Not even 5.
So that's really what's been leading the market. And can you build a big bull market on that? I don't know. I tend to be somewhat skeptical, so that's why I keep wondering whether this market rally is going to poop out and roll over. You're certainly in an extended position, so it could happen. Whoop, come on. Okay. GoDaddy gap up pocket pivot. I know we sent out an alert earlier on that, so I'm not sure. You're asking a question about it. You would have bought it, I guess, this morning when we sent out the alert, and there it goes. It's also, if you look at it on a weekly chart, the pattern doesn't look too bad. It's coming out of a cupish kind of pattern. I don't know, maybe is it a double bottom? I guess you could call it that too if you wanted to, and breaking out to the midpoint. But it's basically a viable gap up, so you would play it on that basis solely. Let's see. Oh, here's one for you, Dr. K. How has the market acted in the past traditionally, or how has the market traditionally acted in the past moving into the holiday season? I don't know. I think you could probably go look at the, what is it, the Investor's Almanac or something like that.
Got a lot of statistics I can tell you. I've studied.
But it's the holiday season, right, Dr. K? So it tends to be a little more favorable.
You're a little bit more favorable because we're in that stronger time of the year. But you really can't. I've never made money off those sorts of statistics because you got to really play the market. First of all, on a stock-by-stock basis, and what is the market telling you? And by the way, when you get the most favorable month versus the least favorable month, it's only a matter of some percentage points. It's not, to me, not very significant. I mean, I think the worst month I think is September, and that's only up something like, I don't know, like 43% of the time or 40%. It doesn't. It's meaningless because it's only up that much means that it is up that much. So if you try to use seasonality in your trading, you're going to get thrown off very quickly. To me, it's just noise, and I would discard it. I was curious years and years ago and just see how all these things work. But again, I've never made any money off it in my own trading. So it is noise, and you got to be careful about not letting noise affect your trading because it will.
Okay, what else we got going here? Is dizzying in a short position? My thinking is if you can't figure that out for yourself, you probably shouldn't be shorting. What you've got here is a cup, sort of a deep cup formation, and stock is coming, it's broken down here on earnings, and now you're hanging above the 20-day. Usually I look for some kind of break of the 20-day moving average first as confirmation that it's breaking down, and then take it from there. So it could be if you wanted to use a 10-day as a stop, but as an automatic short sale position, you just hit it based on some idea that you can slap a label on it and handle it that way. You have to think about whether you consider the reversal here, that's a big outside reversal on heavy volume, whether you consider that problematic for the stock. And if you do, then you would look for a way to short it with a reference point. In this case, you could use the 10-day line, which is at 113.94. It actually bumped right into it, which you can see on the daily chart. So let's see here. What else? I'm going to go through, push these out. Just look at some of these stocks here. Here's Amazon cruising higher, but it looks like it's running into a little bit of loss of momentum here. I think if the market continues higher, this thing could go to 700. The question is whether the market continues higher. We have Facebook, which is kind of fritzing out on its viable gap up. Maybe it comes in. We'll see. I'm short a little bit. We'll see what happens. Twitter busted that 10-day line. It tried to hold the 50-day line. I actually bought some. I sold it this morning, and it's rolling over. It just didn't look right to me. So we'll see where that goes. Infinera is another one I bought along the 50-day. It's not really getting anywhere. It's got some overhead in the pattern because it's pretty far down in its pattern. Is this a head and shoulders or is it a roundabout? It was testable, I thought, but I unloaded that and took that out into the move up here because I don't really like the way it's acting. It just doesn't look right. The other thing is, from my perspective, a lot of these stocks have had some decent moves, and if Infinera hasn't gotten going, well, I've had other stocks moving for me and making money. I'll just back away from that one because I think we might be in a position here to pull back in the general market, and so I want to have a lot of dry powder to play that if that's the way things pan out. But it's not an easy market. You got to be. I think you have to be moving fast. You might catch a couple of things that are, playable on a more trending basis if you think we're going to go into a glorious new bull market. Like I've been telling people, if you think that's the case, you would have bought Amazon and let it go, and or Google even, which is pushed higher. And I don't think it's going to happen. Were you saying something there, Dr. K? I heard some.
Those were mating ducks, I think, outside my window.
What's that?
Mating ducks outside my window. They were squawking up a storm.
Nice. I bet that was entertaining. Okay. Anyways, where are we now? I'm still cruising through my list. Twitter and Silica Holdings. I was testing that. You guys, I told you I sold it just a little while ago. It might come in further. So, but what I'm looking at here is we may get a pullback, and after making some money here, I don't need to be heavy long. Under Armour looks like a short here. It was shortable right at the 20-day this morning. Reversal, boom, there you go. Outside reversal so far. That's looking kind of weak. Apple's looking a little bit on the weak side, and maybe that's going to roll over here. If you look at the weekly chart, it's a failed base. You've rallied all the way up to the underside of the prior base, and so this could put it in a shortable position. So, you know, that's something to consider. And if you would use the 200-day line as a guide for a stop. So here's VDSI. It's trying to hold. It might come in a little bit more. It depends on what the general market does. But they're hammering a lot of these. The cyber stocks are getting hit today. Netflix has been edging higher. You had a pocket pivot volume signature here, but you're not really in any position for a bona fide pocket pivot. And you're coming right up to these highs, so you're reversing a little bit here. And maybe that means this thing will fail now and head back to the downside. I think what happened here is you had a gap down on earnings, and Netflix has had a heavy short interest for a while. And then what's happened since then is the short's not getting any love here because the thing's not breaking down. It's holding sideways. It just melts to the upside. And so maybe at some point here it's going to give way and break back to the downside and head for the 100 level. And that's something to keep an eye on, I think. So put that on my focus list here. Baidu is another one that's been rallying. I've been watching this. This is a very, see how this is all the way up to this area of overhead on the weekly chart? So this might be coming into a shortable area. And that needs to be watched, okay? Tesla is running into resistance at the 30-day. Notice how it slides past maybe, or not the 30-day, the 200-day, the 230 level. Got those numbers kind of mixed up. But you have the 200-day at the 230 level. Roughly, a little above. It slides past it and probably gets resistance right at the 10-week line. Yep, that's what happened on the weekly. And this might become shortable right here. You know, this is not looking so hot, actually. So I keep all of these in mind here because I think you have to consider the fact that we are up there and we could break down. That's a possibility. Microsoft trying to go higher since the Bible gap up. Remember, we had Google, Alphabet, Microsoft and Amazon all gap up on the same day after earnings, and so that was one of the things that drove a big market rally on that day, which is very exciting, I suppose. And it's not really getting anywhere. It's broken out marginally to new highs, I think all-time highs. I'm not sure. Is that right, Dr. K? Is that all-time highs on that?
I think so, yeah. Let me just check.
Okay.
Yeah, it would be. Wait, hold on a second. Yeah, just by like literally a breath, because the all-time high is 53.98.
Right. Okay, let's see, where were we? Might even be shortable. Netflix might be. Let's see. Just put out a little bit here and see what happens. Gilead has been hanging on. And notice how these are breaking down. So, you know, I got to say, watching the action today, I don't really like some of this. It's looking kind of weak. So, while we've been sitting here, I've actually been taking my profits, and I don't have any long positions now. I had a couple, and I just puked them out. And I'm short some Facebook here. We'll see how that pans out. I'll probably use 110 as a stop on that, and a little bit of Netflix here. Volume is running. What's the rate today so far, Dr. K? So we're running higher on the NASDAQ, but about flat on the NYSE. So
nothing that striking. I think everyone's waiting for tomorrow's report.
Yeah, and would that be a catalyst for? You know, and there's a lot of different ways that this could play out. Because, for example, if you have a strong jobs number, okay, the Fed's going to raise rates. Market reacts negatively, or does it react positively? If you have a weak jobs number, the Fed's not going to raise rates. So does that mean the market reacts negatively because we have a lousy economy, or does it react positively because it means we're going to have more Fed lowering?
And that
Right? So it's kind of like,
has been prevalent all year, which explains why the S&P can't find any sort of persistent direction, up or down.
somebody says they shorted Ulta at 172 today. 166 looked like a reasonable target. You mean the 50-day? If you know anything about shorting, yeah, I suppose so. But, that's a pretty basic question. I really insist that, if you're going to try shorting, you really need to get the rules and methods down cold. And if you really have to run around asking people if this is a reasonable target, well, what could you set up as a reasonable target? Will it break to the 50-day? If this is a late-stage failed base, and here's another example of a stock with a pocket pivot going nowhere, then what would need to confirm the late-stage failed base? Well, a break through the 50-day line. So it might go through. Maybe it's a 200-day and you undercut these lows. I don't know. You kind of have to watch the stock in real time and see where it goes, and understand that it's dynamic, and there's a lot going on here and different permutations of outcomes that could occur. And you sort of have to be able to kind of dance with them a little bit. So, understanding it, if that's your downside target, okay. Maybe, but see, I would look at more in terms of it breaks, it may bounce once off of the 50-day up to the 20-day, which is the green line here, then roll over and break down through it. So I may be playing this. If I was shorting it, I could be playing it for a quick break here, then look for a bounce into the 20-day to lay it out again, and then hopefully you get the break through the 50-day. Now, the other thing that can happen is it just busts through the 50-day. But I think for the most part, it demonstrates that these breakouts and everything, they don't really go anywhere. So let's look at some more names here and just see what's going on. Here's EPAM, or Sabre, I'm sorry. This one looked like it was doing okay. Had a pocket pivot here, but look at that. It's breaking down. GoDaddy was a Bible gap up this morning. Now, that's a funky one. I think maybe there's a lot of shorts. This first data is IPO. It was actually a spun out again. It used to be a separately traded company, and then it got spun out again. And so it's a pseudo IPO, but it's trying to come higher, but I don't really care for it. Salesforce comes out with earnings pretty soon, and that's looking like it wants to roll. Here's IDTI. This one has actually acted reasonably well, and I think this was one of the first that we put on as a pocket pivot in early October, correct, Dr. K?
Yes, that's correct.
And it's actually done pretty well. So it's one of the few that has, but if you think about it, the semis have had a decent move. You have Intel at the same time had a decent move, and it may be rolling over. So, the market's down 80. I don't know here. This is looking a little bit dicey, and we've been going up. So I know I've been making money on the long side the last 3 days, and pretty good money actually. And I know that when it starts to get like that, it's getting a little bit long in the tooth there, and so I'm more oriented to take profits at the first sign of a first whiff of trouble, if you will. So.
Actually, I want to correct that. The IDTI, we did not put that on early October. That came on later.
When? Here? Right here, probably. Yeah, so still some upside, but the 20%, is that what it is? Maybe the 26. And if you had that, if you bought this pocket pivot and you had this move of 20% profit, and what would you do? You take it. You don't start thinking you're buying the next Oracle in 2000 or something like that. I remember somebody emailing me or tweeting me or something.
This one, we didn't actually put this on until the Bible gap up. That was on 27th. That pocket pivot, we did not put that one on.
So we put it on here?
We put it on in the gap up.
Okay. Well, that's not going anywhere. I think we're kind of lame there. We should have had it on earlier, like here or here. So we blew that one. So I do remember somebody, I think at one point, let's see, SEMO, it was, I think right around here, it was going to be the next Oracle of 1999. Of course, the thing blew apart, but notice how it's come back. And but all this could be is a big right shoulder. So I don't know. This is looking even dicier. Okay, what else we got? Do you like the action in PANW? Like in terms of what? I think the stock sucks. It's a big volume gap down so far this morning. You're what, an hour and a half into the trading day, and it's trading over half of what it would normally, so it's way ahead. What's the intraday volume on that one, Dr. K?
127%.
Yeah, so why would I like the action? That is that supporting action, so I'm going to try and buy it. I don't know. Good luck. That's all I have to say. I'm not really looking to buy anything right here. You know, I think for the most part, I've taken my profits and right here, and I'm going to let things pan out tomorrow. So, because it's really just a trader's market in a lot of ways, and it's easy to navigate if you want to trade it. If you're trying to buy and hold stocks and buy into strength, I think you're just asking for trouble. Let's see, Netflix is coming down a little bit more. Facebook holding up there. AYI, this is one that has acted okay, but it's a little bit straight up off the bottom, so it probably needs to pull in. Dicom Industries, this is one that was going nowhere. Now it's broken out. Did they come out with earnings?
They will be coming out. I'm not sure what day, but it's very soon.
Here's JD.com. Here's one that gets moving off of, you see the voodoo pullback in here, right into the 10-day, 20-day, right in, tucks into the base here. And then notice how it launches on a pocket pivot type move, runs up to the 200-day, and slam, they push it right back down. That's what I mean about it being a trader's market. You'd buy it here, and then boom, it runs up, you sell it, and it comes right back in. This is an interesting one. It's starting to come off proof point. It's sort of in a funky pattern, sort of a cup with handle or an improper double bottom, but now it's starting to come in with the market, so I'm not so sure about that. Price line has continued to move higher, maybe running out of gas. I mean, that's an extended move, so for these things to take a break strikes me as not only likely, but probably necessary if they're going to try and set up to go higher again. So here's this Luxoft. Here's another one. You know, pocket pivots everywhere in here, but there's big volume on the upside, but it's going nowhere. And you have to ask yourself why. As Shinta's saying, if volume is fuel, as O'Neill used to teach way back in the one-day seminar where he used to show up, I think he and David Ryan did it. We were even in a couple of those, Dr. K, as I recall.
I remember those days.
But it was they used to talk about volume being fuel. You know, so if you see a lot of volume on a breakout, that's fuel for the upside. In this market, this is a reason for the algos to all start trading it the other way. It seems like, you know, it's just a very funky market, funky environment. Movements occur for a certain amount of time and then they end. And if you sit too long, you're going to get your head handed to you. Let's see, what else we got going here? Here's one play. Okay, here's one you put on here as a pocket pivot, and that didn't go anywhere. It's still not going anywhere. I noticed Starbucks looking like it's trying to break down, but it holds in there, but not going anywhere. After earnings, they kind of sold it off a little bit, and it's been neither here nor there. Twitter's another one. We looked at that already, but to me, this looks like it's starting to look like a short, right? So here's the Ulta, and what happened to the Ulti? This one, we put it on here, and it's not really going anywhere. Here's another one. Someone was telling me about this. That was a good trade, actually. They were buying it in here, and you had a nice move like that. But again, that's a decent run-up, and you probably would sell into that. Now it's just chopping around. Here's this Weibo Corp. This is another one coming up off the lows. But here, this could have been seen as a viable gap up / pocket pivot, and then the stock heads higher from there. And now it might be a little bit. You know, you're up 20% or so. What do you got? Let's see. Well, let's say from around here to 18. Not quite. Maybe 15% or so. Here's another biotech I've been watching. It's sort of trying to set up here, but not really going anywhere. This ZS Pharma. So, anyways, that's kind of what I'm looking at in terms of possible long situations. But you know, I don't know. it's looking a little dicey here. I think we're getting ready for some kind of pullback. We'll see. Somebody says, Contrafund now the largest fund owning XON. One reason the stock for entry. But they've been owning it for a while, I think, and they were probably they certainly didn't keep it from doing this. So that's not really where I'd be looking for. I mostly look for stocks where the big sponsorship has come in relatively early, and it's relatively early in the cycle where they start buying it, because these guys will buy these stocks for several quarters. So if they've only been buying something for a couple of quarters, then they may be starting to move into it. But I think if you go back and look at Contrafund, they were buying it a couple of years ago. So they're getting close to the end of their lifespan with that. And they could have been part of the sellers. I don't know what the last report shows. You want to check that, Dr. K?
Yeah, one sec.
When did...
No, my computer is, 1 second here.
Any other questions? Mobilize short. I guess could have hit it today at the 50-day line. It's failing. I've been looking at this. I tried to hit some yesterday, and I couldn't borrow it again. Tesla, might be looking like something to short here, using the high of the day or the 200-day line as a stop. So that could be investigated. Any other shorts?
Okay, hold on. What do you? I got it up now again. What do you want to know?
When did Contrafund first start buying XON?
I'll keep going because my thing is not coming up. So I don't know. I mean, let's not waste time on this. But it's not coming up.
Yeah, but as I recall, they've been owning it for a while. CyberArk as a short. Yeah, but you had to hit it, I guess, around the 50-day as it's breaking down. So I don't know if did this gap down earlier today, but yeah, you're seeing all of these are starting to look kind of grim. I'm almost looking like Palo Alto Networks. It's rallied all the way back, and this might just become shortable right here along the line. But it is considered to be the big daddy of the group. So I don't know. Somebody says Netflix making a run. That doesn't really look like a run to me. It already ran. So if you're talking about on an intraday basis, yeah, it's pumping up a little bit, but nothing all that significant, I don't think.
Yeah, it looks like they bought last quarter, but they did not have anything prior to that.
Okay.
So it's a recent.
Yeah, that might be better for the stock. It's not doing much for it today though. So I thought they had owned it before, and then they're buying it back. But it doesn't seem, if they bought it last quarter, then that means they were buying it as it was coming down, and it just kept coming down. So I'm not sure what's up with that. That seems a little odd.
Any share over the last year prior to last quarter, there was no shares held by Contrafund.
Okay. But you know that.
So they missed.
But I don't see the technical actions in confirming that. You can't just buy a stock because you see some fund buying it. A lot of funds buy a lot of stocks in the wrong position, and or they buy them up too high, whatnot. So I don't think you can just base it on that. You'd watch the technical action. So now you're getting hit today. I don't know what the deal is with this, but it's been acting pretty poor, and it seems pretty odd to me that Fidelity Contra Fund is buying it all the time that it's just coming down. And I think that would have been probably the third quarter, so the quarter ended here. So they're buying it all the way down initially. Interesting. Not sure what that means. Fidelity did the offering into the teeth of the bio decline. What, they did a secondary or something? Is that what you're saying? Interesting. Interesting. Anyways, okay, where are we? Fidelity bought the entire deal. I like it. Well, that'll support your offering. Price line continuing higher. Let's see. We already looked at a lot of these. Gilead, someone's asking about. Yeah, it's breaking the 200-day, so you know it's not looking so hot. And I think Celgene, did they come out with earnings today after, because they've gapped down, so that's probably what's weighing on the group. So this has been a little bit dicey. There's been some trades in here, but I'm not sure if they're trying to set them up again or what. You know, it's just very very erratic action in these names. And I think the other thing to watch out for right now is that you have the I think the House of Representatives is conducting a hearing on overpricing drugs. And so that there could be news that oozes out of that and ends up hitting the group. You know, they're examining these situations where you've seen companies raise the price of drugs a fair amount. Like what was that one company? It was like a $20 drug. They raised it to 900 or 1,000. So let's see. Any other exciting questions? UA still popping around here, still down. Let's see, I'm going through some of my short lists. I was looking at some of the, like this one, Northern Trust, as it moves higher. It had a huge breakdown and it's rallying. And if the Fed isn't going to raise rates, I think that's a negative for financials until you could see this thing kind of roll back over. That's a possibility. And I've been keeping an eye on that. I've been watching also the banks have been edging higher. The XLF has been sort of uneven where you broke down through the 200-day and now you're back above it and they're kind of hanging out. I suppose it would be constructive that the financials could get rallying, which they have been throughout October. So that's probably helped with the rally to some extent. But I've also been watching to see if these things roll over at any time. So somebody's talking about Zyop. It's trying to hang in there, but you know it's been going nowhere. Is this thing going to launch higher and take up? I don't know. So even when we go through some of these others, that's kind of crappy. Kite, and that's trying to come back. But I think you got to watch out with these. I'm a little bit wary of biotech, especially with this hearing coming out, and some of these smaller ones can be pretty hairy rides, especially if something happens like this TTPH. Do they go out of business? No, there it is. Tetraphase, look at that. That'll ruin your day. Definitely.
That's almost an 8% drop overnight.
Yeah. AXP versus Visa is an interesting comparison. I don't really think they're the same exact business. I mean, American Express is sort of it's not as broadly used as Visa, and I know it's not as accepted. You'll go some places they don't accept it. but I don't really understand the contrast. To me, Visa and MasterCard are the leaders. American Express is a financial company as well. And I think they have other lines of business. So it's not really, to me, something that is a comparison because the two companies aren't as alike as you might think. So other than the fact that they all have credit cards. So there's another one. Discovery has been weak too, right? DSCA, is that right? What is Discovery? I remember it was DSCA at one time. Nope, I don't know. Anybody who figures that one out, let me know.
It's DISCA.
Disca, I like it. Yeah, that's not acting so great either. So it's really MasterCard and Visa. I think it's all the payments thing that it's all about. So any other questions? I think we're pretty much to the end of the hour. So anyways, I think you're getting a pullback today. Watch how some of these things pull in. I like to have a lot of dry powder when this is going on. So I'll sell into the move. Like this morning, we were up. A lot of these things were up, and I'll sell into that, like Amazon, when it's up 13, 14 again for the second day in a row, and then back off and see where things go from here. So tomorrow's jobs number might be a big event, but I think we'll have to see what happens once the number is out. And I wouldn't jump to any conclusions necessarily with respect to where the market's going to go. So, anyways, you got anything else to add, Dr. K? That's pretty much it for me.
Yeah, I think we're good. Just let's sit tight and see what happens tomorrow. See how the market falls as usual. And
and have some dry powder in your pocket. That's what I think. So, anyways, we'll catch you guys next week. Have a great weekend.
Take care, everyone.